little company, which is Irish Credit Management Training, and I've been training in credit management ever since. So, I've been there, done that, and this is something that is close to my heart because, to be honest with you, like credit control is never easy. There's nothing easy ever about credit control, and when I was working in it, I loved it. I just really enjoyed the job. Yes, there's pressure, there's targets, there's cash, there's rows, there's all sorts of stuff going on, and I really enjoyed the kind of the rough and tumble of it all. And I set out fairly soon because I liked it so much, and I saw that managers were getting paid a lot more than I was, and a lot of them were doing a lot less than I was. So I thought, you know what, maybe management is the role for me. And so after a lot of study, and I did my diploma in credit management way back in the day, um, I eventually landed my first job as a credit manager. And to be honest with you, it was the toughest time of my life. I thought I was going to die, and that's the only word for it. The pressure I was under, I just could not cope with it. And after a very few weeks, I just felt the overwhelm, the stress, the pressure, and everything else. So for me, learning wasn't a luxury, it was a necessity, and my life depended on it. And thankfully, I'm here to tell the tale. So I did survive it, and that's why this particular topic is so close to my heart. So what I will do now is I have a few slides just to keep me on track and keep you from boredom. So I'm hoping now that you can see the slide that says from, sorry, can you see the slide or can you see the screen, Katrina?
And see the screen.
See the screen. Okay, well maybe what's going
Yep, now we can see the
Now
slide.
you see just the slide. That's grand. Okay, because I don't want to give you a sneak preview of what's happening next. Okay, so that's fair enough. So yeah, this is a topic that's very close to my heart because when we move from being a credit controller to being a credit manager, it's a total change, and that's what I just want to make everybody aware of. As a credit controller, you have a job, you have your targets, you have your ledger, you follow the orders, you do the job, you get it done. And to me, anybody who is good at credit control, you know, they don't see problems as an interruption to work. They see problems as the work. And that's what it is. We are there to solve problems. We are there to overcome excuses in order to get to the payment. And yes, we have to sort out so many things. We have rows with people. God, if we could get an invoice right, like, wouldn't that be just a miracle? So of course there are pressures and there are strains, and that is the job of credit control. And what I find with all the credit controllers I have worked with throughout the years, credit controllers are productive, they are hardworking, often unrecognized for the work that they do, and they do a fantastic job. When you move into management, suddenly everything changes. And to be honest with you, the one thing that I had the greatest difficulty with, and hopefully you will overcome as a result of being here today, is this, is how to shift your thinking from doing it because you've always done it. You have the jobs, you have the tasks, you do this, you do that, you do this, you do that, you get that money, you make that call, you sort that query, you do this, you do that, you do whatever has to be done. And your mindset is all about doing it. And when you become a manager, what the first thing that you have to change if you're going to be successful is to change your thinking from doing it to getting it done. And that's a huge shift. It sounds very simple, and it's probably one of the most difficult things you can do. So to me, there are two rates of pay. There is a rate of pay for working, and there's a rate of pay for managing. Managers get paid more, okay? Because their job is to manage the whole function. And this is the challenge that I will put to you today, that if you are currently in management, and when I talk about management, I'm talking about a team leader role, a supervisor role, any role where you're working in credit, where you have people reporting to you. That to me is the transition, because that's when everything changes. And now what you have to do as a manager is to dispel your immediate urge to do it and to sit back and think, okay, this is what has to be done. Now, what is the best way to do this? Okay. And the best way to do it is through the people who report to you. So those are the most amazing resource that you have. And the transformation into management is about getting the best out of the people who report to you. So rather than jumping in and doing it, which I did at the start, and I felt the pain of that. And it was only when I stepped back and thought, okay, look, I have a super team of people here who are totally being underutilized, and I was becoming the bottleneck because everything had to come through me, and everybody was waiting for me, and I was the person. And if you're that person, just watch out, because people will be talking about you behind your back, and you're there stressed out up to the end. And if all your staff are sort of chatting at you know the coffee machine or whatever the case may be, it's because they don't have enough to do and you are doing it all. So you need to sit back, stand back and think, okay, this is what has to be done. And as a manager, there's a few things that have to change. So the first thing is your mindset. So, you are, as a credit controller, you have a boss, you have a target, you have a job, you have a ledger, you have to look after that. When you move into management, suddenly it's about ownership. It's about this ledger, this is mine. And I saw every invoice that left the building was a reflection on me as the credit manager, that I personally was sending those invoices to each of our customers. And as a result of that, if one of them was wrong, I saw that as a reflection on me and the department. Now, whether I was right or wrong to do that, that is, how I did it. And by taking that ownership and, having my tagline, I say, as a manager, was probably right first time. And my encouragement to my staff and to everybody I dealt with, get it right the first time. Most of our time is spent redoing stuff and doing it again. And if you send out a wrong invoice, you have to correct the invoice, you have to send out a credit note, you have to send out a correct invoice, you have to make all the changes that are necessary. And that's where so much time is spent and so much time is wasted. And if we can get it right the first time, and that's one of the things as a manager, you are responsible for setting the standards in terms of what is acceptable around here. And I make no apologies. I have set standards incredibly high. And for all the staff that worked for me over the years, they will tell you we had very, very high standards. They had to work extremely hard. And I saw my job as manager. And when I talk about me, remember, I'm talking about you. So when I say I set my standards high, I am expecting you to interpret that you are going to set your standards high. I'm not going to accept any shoddy work ever from anybody. Of course, look, we're human, we make mistakes, and I encourage people making mistakes. And I love when people try something new and they get it wrong, and we learn from it and we fix it, and then we go and we make new mistakes tomorrow. That's fine. If you keep making the same mistake over and over again, that is, sloppy as far as I'm concerned. And I have no tolerance for that. And one of the things I think I learned in credit control and I learned in management, that, that people will push you to the limit of what you will tolerate. And the more flexible you are, the easier you are, the more, you know, flexible, I suppose is the word, the more advantage they will take from you. And that goes from staff, that goes from management, that goes from customers. So you have to set out the standards. This is what we expect. This is what we're doing. So change your mindset to ownership of the function. This is my baby, and I'm responsible for this. And to me, what is my goal? My goal is very simple. It's to get paid in full on time every time. That's the job. Will I ever achieve it 100%? Of course I won't. And nobody will. That's what we're aiming for. And then let's see how close we can get to it. So that is that. Um, in terms of understanding management expectations, that is the first job. So as a credit controller, you have a boss and you get to know your boss and you know what your boss wants. And if you're clever, you do what your boss wants, because that's the road to sanity as far as I'm concerned. When you're a manager, you have to understand what management's expectations are for the function. So, assuming stuff or guessing stuff or whatever, no, I have to get inside the heads of the managers to know exactly what they are expecting. And look, if our DSOs are currently at, 63, is that acceptable? Are you happy with that? Should it be more? Should it be less? What are your expectations? What are your expectations from the department? What are your expectations from a write-off perspective? Because sometimes we arrive into a situation, coming from a very, risk adverse climate where, there's no bad debts to moving into a fast growing, developing company where, look, it's all about market share for the first 6 months. So, the whole thing of vetting customers to the nth degree doesn't enter into it. We're going for market share. We're prepared to accept a certain level of loss because that goes with the course. And as long as we manage that and focus that and work within the provisions that we're allowed. So it's not always about zero bad debts. Some companies are. And if I fail to understand what the management expectations are, then I'm going on a solo run, and that's a recipe for disaster. So just make sure that you're in tune with the senior management in your company. Um, then once I have my firm footing and I know what is expected of me, now I can set out the expectations for the department on the basis of that. And obviously, if they're looking for, you know, 58 days DSOs, I'm looking for 55 because I want to, over deliver on their expectations. So that is what I need to do. Focus is vital from a management perspective. And what we have to focus on is we have to focus on the positives. We have to focus on the results that we want to achieve. Too much of credit management is focusing on negatives. It's focusing on what we didn't do. It's focusing on, and what did we not do? If we go to our management or our board and we focus on our overdue debt, then what we are doing is we are focusing on the money we didn't collect. And if we wonder why they hold us in a negative light, then that's exactly why they are doing that. So tell them how much money you collected. Tell them what percentage of the ledger is within terms. So this is what I am doing. If you tell them what percentage of the ledger is overdue, you are focusing on what you didn't do. So make sure you keep a positive spin and let them know the great job that you're doing. Clarity is not only clarity from the management's perspective, and sometimes managers don't know what they want, and credit control can be a bit of a mystery, particularly to accountants. I spent a large part of my career reporting to accountants who hadn't a clue what credit management was. Oh, look, they understand the figures and they understand the provisions and they understand the, accruals and prepayments and all that sort of stuff. When it comes down to the relationships and the customers and how it actually falls together, they really fall short. So that's my role. I look after that. I do it. And that clarity has to be brought to your staff as well. So, they have to be clear in terms of what's expected of them. And that's the job of the manager to set the standards, to set out your expectations in no uncertain terms. And then, and this is very important, I see my job as manager to give my staff the tools they need to do the job. So if that's systems, if that's time, if that's space, if that's whatever they need. That's my job. My job as a manager is not to control people or tell people what to do. My job as a manager is to set out the expectations, and I focus on results. Only always focused on results. That's exactly what I want to do, and I expect my staff to do the same. Now, look, things go wrong, people go on holidays, of course we're going to have disasters. That just goes with the territory. My job as a manager is to make sure that if one of my credit controllers has a disaster, that the others can make up the shortfall. So as a group, we still hit our target at the end of the month or quarter or whatever it happens to be. When you move into management, the job changes as well as not doing it and getting it done. Suddenly, the most important thing are the relationships. And you need to spend time developing and fostering relationships. And you might think, sure, that manager's doing nothing. Um, if you are building relationships, go with all the other departments, meet the other department heads, get out with a sales guy for a day or a couple of them. See what the real world in your business looks like. It's all very well sitting at a desk and writing policies and rules and procedures. If they're not going to work in the real world, then you are bound for failure. So, building working relationships with department heads, with sales, with marketing, with pricing, with operations, with all the other departments, make sure, because credit control, some people see credit control as the end of the road, that, everybody does all their stuff. We have our marketing, we have our sales, we have our distribution, we have our whatever, and then we have our billing, and then eventually at the end of the line, there's the credit controllers to pick up all the slack and sort out all the problems at the end. That's one way of looking at credit control. To me, I saw credit control in the heart of the business. We're on the heart of the business. We know our customers, we care about our customers. And part of that customer care is getting our billing right, getting our payments right, setting out their expectations in terms of what they need to do, and then we provide them with what they need to do what we want them to do. So building relationships, and not only with the heads of other departments, also with your key customers. And if you come to writing a credit policy, which for me was probably the first job I did as credit manager in every company I went into. I just reviewed the policy just to see what are the rules and tweak it and all that sort of stuff. And how you do that is in cooperation. So you go to the sales guy and say, look, this is the policy. Is this working for you? What do we need to change? And look, we have to facilitate everybody. We're not going to give in to everybody. My first meeting with a sales manager in a company, it was my very first day I was being introduced to people. And in walked he was the sales director at the time. And when he was told that this is Declan, the new credit manager, he didn't say hello, good morning, how are you, nice to meet you, or anything else. He just sat back and said, so this is the man I'll be fighting with from now on. That was his opening comment. So this is the man. And why I'm telling you this story, because it stuck in my head, for one of the few times in my life I had the answer straight away and not 2 days later when I thought back about what I should have said. And I just looked him straight in the eye and I said, well, Michael, I said, if we're not fighting, one of us isn't doing our job. And that's where it started. Because if I accept everything the salespeople say, I am being an irresponsible credit manager. If he accepts everything that I say, then he's not doing his job as a sales manager. So as long as we're both working for what's in the best interest of the company who's employing us, then rows are fine as far as I am concerned. And the last thing there in terms of the move, and this is a mistake that I see a lot of credit managers making. They sit in their offices, they, dish out the orders and all the rest, and they fail to spend time individually. Now, you say, oh, well, we have a team and we have our team meetings and we have our huddles and we have our town halls and we have all this kind of stuff. No, to me, management is done on a one-to-one basis. That's how it's done. It's done on a one-to-one basis. So I make sure I make time every day. Well, maybe not every day, because everybody is different. And if I checked in with you every day, you might think, he's micromanaging. So some people, maybe once a month is enough to check in with them. Somebody else, I need to check them out every day. Somebody else, it might be once a week. So knowing my staff, knowing what makes them tick, knowing what makes them comfortable, and having communications with them. Because I'll tell you something. Your staff have so many talents and skills that you aren't even aware that they have. And part of your mission as a manager is to find out what those talents are. That's your job. So get in there, talk to them individually, find out what excites them, what does, and rather than getting somebody who's terrible at spreadsheets and sending them off on an course, no. What I will do is you hate spreadsheets and you're great on the phone and you love chatting to people. So Jenny, what I'll do with you is I will see because Margaret loves spreadsheets. Oh, she lives for them. So I'll get her to do the spreadsheets and you can call some of the customers. Do you know what I mean? So if I am a manager, now the job has to be done and there will be jobs that people don't like and that's the real world. You have to get over that. By talking to people and by concentrating the workload of the department leaning on the talents of the people that are reporting to me. They feel a sense of worth. I'm getting the job done with the greatest of ease. And if I can avoid giving people jobs that they hate, then the whole thing is going to just run far smoother. And we can only do that by having individual communications with each of our staff. We find out what their triggers are, we find out what they're great at, we find out what they love doing, and then we see how we can create the world that will maximize the talents of all the people. And I think in the words of Stephen Covey, he said, and their weaknesses are made irrelevant by the strengths of others. So that's your sort of ideal organization where everybody is working to their strengths and their weaknesses are made irrelevant by the strengths of others. So the fact that you can't do spreadsheets doesn't matter because we have three other people in the department who are brilliant at spreadsheets and love doing them. So come on, we focus on what you do best. So that is that. So relationship building with customers, you can cut through red tape if you build relationships. So starting with your top five, your top 10, your top 20, your big customers, I would have spent a lot of time with my high risk customers. So I'd identify an area, they're very high risk. I had to know more about them than anybody else. So building those relationships. And sometimes my boss wondered how I pulled the plug a month before a company went into liquidation. Where I got the information from was from the company themselves. Oh, Dick, things are terrible here at the moment. So by building up that relationship with people, where we could, and look, I wasn't going to pull the plug. We'll find a way to trade through this and reduce the exposure. I am prepared to do that. And by building those relationships with people, we can cut through so much of the hard work. I'd say I eliminated huge amounts of work just by going and having a chat with customers, defining their expectations, finding how we could do that in the easiest possible way, and then delivering it. So that is that. Strengths and weaknesses of staff members. So I've said about defining the expense standards. Your strengths and weaknesses. Just to be clear, the definition I use for strengths and weaknesses comes from a man called Marcus Buckingham. I don't know whether you've ever heard of him. He's English. We won't hold that against him. He's living in California, and we probably won't hold that against him either. He is absolutely wonderful. His first book was Go Break All the Rules, or First Break All the Rules. It's a super book. His definition of strengths and weaknesses is some people think that a strength is something that you do well and a weakness is something you do badly. No, no. A strength is something that makes you feel strong, and a weakness is something that makes you feel weak. So by changing that definition, we can have somebody who is very good at something and hate it. When Steffi Graf met Andre Agassi, their opening line of the conversation was, she said, "You know something? I hate tennis." And he said, "We all hate tennis." So so that's and these are people who are pretty good at it. So having people who are doing what they love is the important thing, and knowing what makes them feel strong and knowing what makes them feel weak. That's the difference, and you have to know that for your staff members as well. Setting targets. You set the targets, they are challenging and they're achievable. If you set unrealistic talents based on, cash flow requirements rather than the sales we made last month, then people just switch off if they are not attainable. And if they're too easy, people become complacent. So we just have to keep pushing to the limit of what we can get. So that's part of the role of a manager as well in setting the performance. And praise. If you have people reporting to you, take time out. I used to take time out in the words of, to catch them doing something right. And it's a very important thing to do. And say well done. And if they've done something brilliant, that's great. Well done, super. Now, you have to be careful with praise because some people like to be put on a pedestal and other people would die a death if you put them up on a pedestal. So by knowing the people and knowing how they need to be praised, that's a very important attribute from management as well. However it is, whether it's privately, whether it's in an email, whether it's in a one-to-one meeting, whether it's at a town hall where you put them on a pedestal to say how great they are, whatever way works, make sure that the people around you feel appreciated, because if they don't, they are going to walk. Positive reporting to management. That's what I need to do. So look at all the things you do. And again, no secrets, no surprises from a management. And if we have high risk customers, if we have things that are going wrong, I'll come straight out and say, look, these are the issues, these are the highlights, these are the things that we need to address. And obviously, when you're dealing with management, you come with solutions and not problems. And this is how I think we're going to do it. Running risk reports. One of the reports I ran every month was an exposure report. And the exposure report was for my eyes only because nobody else needed to see this. And what this was, a lot of people look at the month-end ledger and assess the balances that they're owed. And a lot of them fail to realize that the balance at the end of the month is the lowest that balance is at any time during the month. So if somebody owes you 20 grand on the 31st of May, that account will go to 60 grand by the end of June when the payment comes in and it goes back down to 30. So what I need to understand from this customer is that, okay, the balance is 30 and it was 30 last month. There's a 60,000, it'll go to 60 before the next payment comes in. So my exposure there is 60. And then I need to see how do I manage that exposure. So do I have retention of title on the goods? Do I have a charge? Do I have a something that I can put my hand on? How do I mitigate that potential loss? And by understanding, and it's not just the account and double the account. It could be treble the account because if they're doing 30 grand a month business with you, the balance at the end of the month is 30. They order 30,000 on the first of the month, which of course you'll deliver because it's within terms. And then if they pay you by check and the check bounces, so now suddenly you find yourself on the third of the month with a 90,000 potential write-off because they've just appointed a liquidator. And the boss says to you, hold on, it was 30 grand on the 31st. Now you're telling me there's a potential loss of 90 grand. And that doesn't look good on your CV. And you'll probably need a CV. So on that basis, what I would do is I would assess what my maximum exposure is, what is the worst possible thing that happened, and then I make sure that it doesn't. So that's that. And that means I can highlight high risks before they become issues. So that is very important as well. In terms of the skills that you need, and look, you're on a seminar. We'll wrap it up in the next few minutes. You know, just be aware. The other thing that I hear a lot about is imposter syndrome, where people feel sort of insecure in their job. And it's funny, I was at a seminar with a lot of very serious people, and it was a lovely event because we were among friends and we could chat openly. And the gas thing about it is when the topic came up about imposter syndrome and feeling out of your depth, everybody in that room felt the same. And it was just the room was unique in terms of people admitted it, because most people don't. So there are times you do feel out of your depth, and you wonder, what am I doing here? Like, how am I, the manager? Well, look, you have made it as a job. It is your role. You take ownership for the role. You are worthy of it, and it's your job to hit the standards that's required, and dispel all thoughts. And as long as you're working with other people, if you try to have power over people and tell people what to do, that's always going to backfire on you. What I always did as a manager was kind of adopt a lower position of power and say even to the staff member, so how do you think we should sort this? And it's amazing by doing that, by not imposing my will on people. Remember, my thought process was on the outcome, not on, you know, the how we get from here to there. It's there. How do we get there? And there's lots of different ways of doing it. And maybe it's one, two, three. Maybe it's A, B, C. Or maybe you're dealing with somebody who's dyslexia. It's A 42 93 yellow pink purple taxi uh, answer, you know. And while you might think that's crazy, I have two sons with what I call the gift of dyslexia. They have such a different way of thinking about things. It's only so rather than dismissing it as stupid, just sit back and think, okay, explain that one to me. And sometimes the wisdom is just astounding, so just be open. And remember though, our job is to get the results. So that's what it's all about. Um, so focus on the results. Also focus on yourself and your own confidence as well, because the three things. And in terms of ICMT, the one thing and part of the reason you're here, we run, and this is because I'm passionate about education in credit. I want to see credit being a profession, that sits somewhere between sales and finance within the business. So the finance people says, do we need it and can we get a cheaper one? The salespeople want to sell to everybody we can. And in the middle is a credit professional and hopefully a credit director who will say, does this make sense? Does this make sense to the business to do business with these guys? Does this pricing make sense? Does our margin make sense? I saw my role, and hopefully you will yours. When I defined my role as a credit manager, I saw it as being the manager of the margin. My job is not just sales, it's about profitable sales. And by turning debtors into cash in a timely basis and on a predictable basis, I was adding to the margin of that business, to the profits. And that's what I bring to the party. And by knowing and understanding that and taking ownership for the margin, that put me in a senior position within the company. And in order to be professional with a lot of HR departments, you have to have qualifications. And in terms of credit management, for over 20 years now, we've been running the diploma in credit management that has since become the international diploma in credit management. And it covers risk, it covers credit management, it covers international trade, it covers. So the diploma covers the credit function, the right first time, the billing, the processes, the how to do the job. So anybody working in credit control, this defines the standards of credit. And then the advanced diploma, which is the second stage of the process, that focuses on the management of credit. So we work on the basis, look, you know how to do the job. Now it's about managing yourself, it's about managing people, it's about managing the team, and it's about managing and controlling the function and the risks and everything that can go wrong in between, about managing relationships, managing goal setting, and all that kind of stuff. So, if you want to join us, Katrina, I know is on the line and she would love to talk to you. If you know somebody who you think, they want to get ahead in credit, and having the letters after their name and the recognition is something that they will benefit from, we would absolutely love to hear from you. And we are passionate about what we do in the area of education and credit. And we're obviously there to help every way. And the last thing I will say, because I have to get the ad in while you're all here, back to credit management not getting the recognition it deserves. And sometimes you're buried in dungeons for your own and everybody else's safety. 10 years ago, we came up with the idea of the Irish Credit Team of the Year Awards to recognize great work being done by credit people up and down the country. And thankfully, this event has gone from strength to strength every year. And we have teams from all over Ireland who are competing in different categories to be the Credit Team of the Year. And just as a day out to meet other credit people, to define the standards as a reward, and you can add strings to it as well. Look, if we get to this by September, because the closing date is the 11th of September. So look, if we can do this by the end of August, I'll put you forward for the Credit Team of the Year awards or whatever the case may be. There is no charge for entry, so you're welcome to come and join us. The closing date is September. We then take all the applications, reduce them to a short list. The shortlisted teams are notified of their success. They're invited to a lunch that'll be in the Royal Marine Hotel in Dunleary on the 20th of November. And then we present each team with the awards. And there's photographs, Sunday Business Post, and all that kind of stuff. There's trophies, and it's just a feel-good day to say well done to the hard-working credit people who seldom get recognition, never mind a lunch. And the sales and marketing people, they're lunched out and all putting on excess pounds because of all the lunches they're doing. And the poor credit guys get nothing. So just even, and a team can be from two to 100. So there's no sort of, oh, we only have three on the team. No, and again, even with three on the team, if they're performing as a team, and excellence is defined by the company that is employing them. So there's no, you have to have DSOs below 40. There's none of that nonsense. It's the contribution that they are making to the business that they're working in. That's what we're recognizing on the day. So look, guys, there's our contact details. I've sent the slides to Katrina to share with you. If you have any questions about credit, about management, about risk, about anything, that's why I'm here. I love credit. I've always loved it. I'm a nerd when it comes to it. I'm always happy to help people as well in any way I can. So, yes, we sell education and training because that's the day job and we have babies to feed. We do love credit and want to help people in any way we can. So, look, it's been a pleasure. It's 10 past one now. We said it'd be 45 minutes, so I'm a few minutes early. If you have any questions, queries, observations, I'm happy to talk to you. If there's a specific question you came today with that I didn't answer, now is your opportunity to ask me and I will answer it as best I can.
Thanks, Declan. I'm going to
Thank
stop
you
the
very much.
recording now just to open the floor.
Yeah.